please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning. You're watching Chartbusters. This is a show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks. I'm Mangala Malu. With me is Reema Tendulkar. Good morning, Reema. You know, we opened mildly in the green, then there was a bit of that scare, and for now, seems like we have spared those blushes. We have recovered from the lows, the Nifty holding a good 50-55 points above the 10,500 mark. Though what is interesting is I was looking at the Nifty futures, and out there the premium from 22 rupees has come down to about 10 rupees. So maybe there could be some bit of selling pressure at the highs, but I am excited about the fact that the India Wix, that one's come down by about 5% as we speak. So those are a couple of positive and some negative points as well.
Well, I'm just excited that after 5 days of losses, at least today we are seeing some gain at the Nifty level, at the mid-cap index level. The Nifty, in fact, has now climbed back above that 100-day moving average after breaching it yesterday. And after so many days, you've got a positive advance decline ratio. So as we speak, 3 stocks in the green for 2 stocks currently in the red. The Fortis EGM has concluded. That's the update that we're currently getting. Remember, it was expected to start at 10 o'clock. There were on the agenda was that 4 shareholders, whether they're going to be voted out. Before that, you had 4 directors, independent directors, whether they're going to be voted out. That was supposed to be the agenda. But prior to that, you had 3 directors, except Brian Tempest, already handing over their resignation. We'll try and get you updates on what transpired at this very crucial EGM. But the only update that we have right now is that the EGM has concluded. That stock and more on our radar. Before that, a quick run through of the top headlines. SBI under pressure ahead of earnings. The asset quality is expected to deteriorate, and analysts expect the bank to post a loss in the 4th quarter. Commentary from the management on the watch list will be a key factor to watch.
More results to watch today from pharmaceutical pack, pricing pressure in the US and continuing regulatory issues to weigh in on Dr. Reddy's earnings, while for Cipla, margins expected to expand to 19%. Oil marketing companies, IOC and HPCL expected to report a steady quarter.
Just Style has gained 7% on the back of a good quarter. The management expects a 14 to 15% minimum revenue growth in FY19 and EBITDA margin sustaining between 22 to 23%.
Stocks reacting to weak earnings. Mahanagar Gas, that one posts a big operational miss with the EBITDA margins way below estimates. Future Retail's earnings too were below street expectations. Total same-store sales growth coming in at 6%. Hatsun Agro down almost 7% on the back of a weak quarter.
All right, straight away then, let's address the market technicals. There is a recovery of close to about 2/3 of a percentage point from the low point of the day. Ashwani Gujral joins in as always. Ashwani, what should we do now? Yesterday, if someone went short, should they change their stance? Do you see this only as a mild pullback, or do you see it sustaining?
Well, for the day, the market is up, and for the day, everybody should be long, because the first pullback happened in the first half an hour, and now we are getting further follow through on the upside. And today, market breadth is fairly decent. Mid caps are recovering, and particularly, financials and NBFCs are recovering, and that's a strong group. And when that moves up, markets generally move higher. I think we could probably get closer to 10,000, 680, 700. Similarly on the banks, maybe 26, 150, 200. So still more upside is there. But what's interesting is, a lot of NBFCs got beaten up because each time, rates, yield, etc., they move higher. The NBFCs tend to get beaten up. Now the most beaten up within NBFCs has been the housing finance space. So I believe today could be a fairly strong day on Canfin Home, LIC Housing, even India Bulls Housing. And this could even be a swing trade where they go up for the next 3 to 5 sessions, because that's where the most amount of beating is there. We've seen, Bajaj Finance hit fresh highs almost. I think similar things you can expect on Bajaj Finserv. That's a buy with a stop of 5,800, target of 6,150. Ashok Leyland is a buy with a stop of 133, target of 146. India Bulls Housing Finance is a buy with a stop of 1,100, target of 1220.
Right, Ashwani, two questions before we let you go. The first one is on Strides Shasoon. That one fell from what, 500 to about 340 in the last two sessions, is showing some signs of recovery today. The other one is Tata Global Beverages. That one too fell from highs post results and now is seeing some signs of life today. Do you think these are shorting opportunities, something has reversed, or stay away from Strides as well as Tata Global?
See, in Strides, if you are looking for, say, 550, then it's a buying opportunity. But is it the bottom? That I'm not so sure of. Tata Global corrected back to its 200-day moving average. Again, markets were weak. I would, between the two, get into a Tata Global Beverage rather than Strides. But overall, I think the worse the stock, the more beating it's had. In a short covering rally, that tends to do better.
All right. Thank you very much, Ashwani, for joining in. So the call right now is that stay long. PPAB Automotive has reported a good set of earnings. They've reported a 30% jump in the company's revenues with an improvement in margins. To discuss this in greater detail, we're now joined by the management. Thanks, Mr. Jain, for joining in. You've ended FY18 with a revenue growth of close to about 15% and an improvement in margins. Can you give us some sense of how FY19 is going to shape up for the company in terms of revenue growth and margins?
For the financial year 18, we've basically increased our top line by 15%, as you mentioned, and we've increased our EBITDA margin by 27.42. This is a margin improvement of about 2.04%, and the PAT, we've been able to improve it by almost 50%, and the margins have been improved by 2.5%. So we are continuing with our journey of achieving excellence across all facets of the organization, and the results are what is being shown today. And we hope that this trend is going to continue in future as well. Okay,
but is FY19 going to be better in terms of growth rates and margins compared to FY18?
See, the automotive market is supposed to grow somewhere between 7 to 9% in financial year 19 as well. Okay. And historically, we've grown faster than the market. So I expect the same trend to continue.
All right, so 15% revenue growth in FY19 should take you to around that 460 crores on the top line, right?
Yeah, somewhere around that figure.
All right, fair point there, Abhishek. The last quarter we saw 30% jump in the revenues, 40% jump in your operating profits. Was that on account of a new plant that you've commissioned? I think some capacity added in Gujarat, Chennai?
Not really. Okay. In the quarter 4, we basically recorded a total income of 127.6 crores, and out of this, 96.6 crores were part sales, and the rest were tool sales.
All right.
So part sales grew by 11%, and that's why we've been able to record a healthy EBITDA and a PAT margin for the quarter 4 as well.
And going forward, what is this mix likely to be, part and tool?
See, our main objective of the company is part sales. So tool sales happen as and when a new car model is launched in the Indian market. So part sales are supposed to be robust going forward as well.
Okay. You have started commercial supplies to Hyundai, right, Abhishek?
Yes.
Okay. When did that start? How big is that going to be a client for you? Can you ramp it up?
In the last financial year, Hyundai business contributed less than 1% of our sales.
Yeah.
But this year we are expecting that it will contribute more than 4% to the top line.
All right, more than 4% to the top line. In that case, if you could give us a rough client breakup, I believe 55% revenues come from Maruti. If you could tell us the top 5 clients and their contribution to your sales?
See, for the financial year 18, Maruti contributed 48% of our sales, followed by Honda, which was 30%, and Nissan and TKM about 8% each, and Tata around 3%.
All right, and what was your revenue per car? Around 1,200 odd for Maruti and the others?
It ranges between 1,200 rupees for the sealing system that we produce, and it ranges around 5,000 rupees for the injection parts that we do, mainly for Honda.
Okay. If the industry moves increasingly towards electric vehicles, how will the company be placed?
Well, the products that we make are neutral to the kind of engine that is used in a vehicle. So, be it IC engine or electric vehicle, our products are going to be used in any sort of vehicle that is being produced.
One of the notable features of last year is that you onboarded a big client like Hyundai. Going ahead, are you in conversation with any big clients, whether in passenger vehicles or commercial vehicles, that we should watch for, which could catapult the company's growth and make a material difference?
See, we are continuously scouting for new customers in the Indian market. So, in the last quarter, we added MG India also as our customer. And now we are discussing with Kia for opportunities that may exist.
All right, Abhishek. So, final point, what exactly is your current capacity, your capacity utilization, any capex plans for next year?
Our utilization was roughly in the range of 80%. And next year, since this year we've set up new plants in Gujarat and Chennai, so most of our capex requirement is complete. However, we might need up to 30 odd crores this year to meet the maintenance capex and some odd capex which is required.
Is there scope?
And most of this capex will be funded by us through our internal accruals only, and we're not looking to raise any extra loans or something from the bank.
So 460 crore revenue in the next year is what you've guided for. Is there scope for you to improve the margins? Because the last time I remember you telling us you can't improve them beyond 20%.
Well, we are very comfortable at the margins that we've achieved in the whole financial year. So I think we should be able to sustain those margins going forward as well.
All right. Thank you very much for joining in. So that's the word from PPAP Automotive, that they will continue to grow faster than the industry. Margins are sustainable, and they are in talks with Kia to start commercial supplies with them. Stock is up nearly 2.5%. Markets holding on to the gains that they've clocked in the last 1 hour, so higher by close to about 0.3%. There is an intraday recovery that we're staring at since the start of the trading session. The stock which is right now on our radar is Aztec DM. This is one of the new listings that got listed just in the month of February. However, the stock has not done too much since then. First quarterly and full year numbers being released by the company. Azad Moopen, the chairman of the company, joins in now. Good morning, Mr. Moopen, and thanks so much for joining in. We have very little history in terms of, the company's performance, at least in the stock markets. You've ended FY18 with a revenue growth of 13.5%, margins at close to about 9%. Give us a sense of what your revenues and margins will look like in the coming years.
Yeah, we have done well in the last year, as you will see from the results. But giving a guidance, I don't think we should be doing that. But we have been traditionally growing, and we should be continuing that growth.
All right, you can sustain that growth. Dr. Moopen, if you could give us a sense of what exactly was your debt repayment during the year, because you had the IPO primarily to repay your Indian debt. We see a sharp correction in your finance costs. Consolidated finance costs have nearly halved at 185 crores. So what is your debt situation like? And going forward, how are you planning to repay more, or are you planning to repay more?
So we have, out of the total, the money that came in from the IPO, 560 crores, this was paid towards retiring the debt in India. So mostly the debt in India has been retired. And we have debt outside India, where we have the major business. As you know, 83% of our business is from outside India. So our debt also is outside India is more, which is about 2,883 crores now.
That's outside of India?
Yeah.
And the Indian debt would be how much?
It will be 358 crores now.
Okay. Mr. Moopen, year gone by, the operational profit included losses of 2 new hospitals in the Gulf area, one in Sharjah and the other one in Doha. Will they be loss-making in FY19 as well? And if not, can the company hit double-digit margins then in FY19 if these hospitals turn profitable and contribute to your operational performance?
Yeah, thank you for that question. So this has been one of the reasons why last year we had a drag due to this new hospital which were started. So we have just, towards the end of last year itself and the first month of this year, it has just gone into the EBITDA positive stage. And we hope that this will kick in this year and will have an impact on our EBITDA this year.
So it's likely you will have double-digit margins in FY19, right?
I don't want to give any prediction, but we hope we are quite close to the double-digit mark. But with this, we hope that we'll be there, but I can't give any guidance, as you know.
Dr. Moopen, 53% occupancy in your GCC countries have given you a revenue in excess of 5,500 crores. I remember the last time you came during your IPO, you said that GCC countries are a function of crude as well. Crude prices are at $80 per barrel. You have capacity, headroom out there. Do you think occupancy is going higher could actually take the revenues to closer to that 6,000, 7,000 crores in the next year?
So, see, the reason why we have this lower occupancy in GCC is not because of anything connected with crude. I don't think it is due to that. It is mainly because of the increase in capacity. As you rightly mentioned, we had these 2 hospitals which were started. So our capacity has increased, and that is why we have a lower occupancy. But the general economy is looking up, and that is something which definitely will help in improving the occupancy. And with our, more of clinics being providing more of patients to the hospitals, I think we should be having better occupancy.
What number are you targeting?
It should be definitely 60 to 65%.
What's the strategy of the company going to be in FY19? The top 3 things that you're looking to target, Mr. Moopen?
Yeah. So one of the important things that we are looking at is cost optimization. Cost optimization is something which will definitely help us in improving the bottom line, which we have already done this year. And you will see that even though our revenues have grown only to some maybe 15-20%, the profits have been significantly increased due to many reasons. One is the efficiency improvement and cost optimization. So the second thing will be driving more of medical value travel patients to India. See, we have now some of our hospitals having about 17-18% of our revenues coming from patients who are coming from the GCC. So their ARPO, or their average revenue per occupied bed, is at a much higher level than our normal Indian hospital beds. So we think that that will be a great opportunity for improving our performance of the Indian hospitals, increasing the occupancy as well as increasing the profitability. Then, of course, there are hospitals in pipeline in India as well as in GCC. We would like these hospitals to be made profitable as early as possible, and these are the main focuses which we will be having.
What's your India occupancy target for next year? This year was 62%.
Yeah. So the India occupancy, we hope that this should be around 70% because there is not too much of an increase in the number of beds. But there is 2 of our large hospitals, one at Bangalore, the other one at Cochin, is in the ramping up stage, and both these hospitals should have much more occupancy, and these are large hospitals. So we must be doing better in occupancy when we look at the overall rate.
So I'm just recalculating the numbers that you had said, 65% occupancy for your GCC business and 70% for your India business. That means a revenue of 8,200 crores roughly is possible in FY19, right?
You are again asking me to give some guidance. As I told you, we have been having significant growth year over year. If you look at our history, we were just a $100 million company in 2008 when the first private equity firm invested. This went to whatever we are now due to this growth which happened in the last 10 years. So we have that growth, but we as a prudent company don't want to give any guidance to the investors.
Your thoughts on the Nipah virus, which is claiming lives?
Yeah, so this is a small issue in Kerala, which I think we are actively involved in that. In fact, we have sent all our doctors and all whatever is capable. We have sent from our Calicut hospital. But more importantly, from the financial view, I think this is not going to have a finance impact. The salary which is increased in Kerala, which is going to have some impact, which we will have to now look at increasing the tariff and containing that.
Okay, let's hope it does not have a human impact as well, Mr. Mupin. Thank you very much for joining in. That's the word from Aster DM.
A bit from the top, about 20 points on the Nifty. 10,540 is where we are at. The big boy HDFC Limited, that one is weighing down on the index, currently at the low point of the day, and ahead of results, some pressure built even on the oil marketing companies. IOC as well as HPCL should come up for you, currently trading at the low point of the day. But